Morning. Welcome to today's shared learning event. Thank you all for attending. Today we're going to be talking about microfinance and village savings and loans and social enterprises and looking at how they act as a pathway to sustainability. I'm Beth Kidd. I'm the Senior Development Support Manager at Cymru Africa, and I'm joined by my colleague Emma Beecham. We're going to have presentations today from two organisations who both coincidentally are in Malawi, but I will run through a bit of housekeeping before we go to the agenda. Can I do the next slide? Okay, so for those of you who are new to Zoom or haven't used it in a while, I'm just going to go through a few ground rules. If you can rename yourself to include your organisation, that just makes it easier for us to sort of identify you in the question and answer session. We are recording today's session, so if you do want to remain anonymous, please turn off your camera and change your name to Anon. You can use gallery view to see everybody, but we will be pinning the speakers so you know who's speaking. Please can you put yourself on mute unless you're speaking to reduce background noise and interference. It makes it easier for us to hear what everyone else is saying if those not speaking are on mute. And then also use the chat function to introduce yourself and your organisation. It would be particularly useful if you could say whether you're working on a microfinance or social enterprise project. And you can also use the chat function to contribute comments and questions, or you can raise your hand to speak, either physically raise your hand, or you should have on the little bar at the bottom or at the top, it depends on what system you're using, you've got a reactions button, and if you click on that, it allows you to put up a little raised hand emoji, so that will let us know that you've got something you want to contribute. If you don't have a good internet connection, sometimes turning off your camera can help, and if you drop out or you get kicked out of the Zoom session for any reason, you can rejoin using the link that you clicked on to get here. Please treat others with respect. We encourage challenging and constructive conversations, but people's lived experience isn't up for debate. If you have any serious concerns and want to make a safeguarding complaint, you can find information on the WCIA website about how to do that under their safeguarding policy. Okay, on to the next slide. So this is today's agenda. We've gone through the ground rules and introductions. We're going to have a look at the definitions and key terms and give a bit of an overview of microfinance and village savings and loans and similar financial sustainability systems. It would be great, like I said, if you can introduce yourself in the chat and say where you're from and what your organisation does. Unfortunately, we're not going to have time to go around individually and get everybody to introduce themselves verbally, but hopefully you'll have a chance to chat to people later on in the session. So we have two speakers today. As I said, we've got case study one from Ezekiel in Kumo in Malawi, and then Emily and Kumo from the Capacity Foundation, also coincidentally in Malawi. We'll then have time for a bit of discussion and question and answer, and then we'll have a poll at the end. We'd really appreciate it if you could participate in our polls, because it helps us understand whether we're on the right track and whether our work is having an impact. And then we'll just have a little bit of a wrap-up session at the end. If anybody has any questions at this point, please, like I say, do put them in the chat or raise your hand. Otherwise, I will hand over to my colleague, Emma.
Great, thanks, Beth. So I was just going to give a quick kind of overview of some of the definitions that we're going to be talking about today. I'm not going to spend too long on it because our case studies and speakers are going to talk about these ideas more. So financial inclusion, that refers to the equitable availability of opportunities for people to access financial services that meet their needs and delivered in a responsible and sustainable way. And financial services can include credit, loan, savings, payments, insurance, and other financial management services. Microfinance, that refers to the financial services that are provided to usually low-income individuals or groups who are typically excluded from traditional banking. And these groups are often unbanked or underbanked, meaning that they store cash or convert money to jewelry or other assets that are then vulnerable to theft. So most microfinance institutions can focus on offering credit in this form of small working capital loans, sometimes called microloans or microcredit. But many also provide insurance and money transfers and savings accounts. And microfinance aims to improve financial inclusion for marginalized groups, particularly women and the rural poor people, to promote self-sufficiency. Social enterprise, so that can be defined as an organization that addresses a basic unmet need or solves a social or environmental problem through a market-driven approach. And then village savings and loan schemes, I'm going to talk about that on the next slide, but just to emphasize that these things are, most of the initiatives can be linked to each other, and they're often linked to training, for example, in financial management or business skills or marketing. So next slide, please, Beth. I'm not going to talk through this whole cycle because I think we're going to be talking about it in the case studies too. And I've also have a link to resources where you can read through the detail of this. And obviously, many of you are using these schemes anyway, so I don't have to explain them to you. But this is just a typical example of how a village saving and loan scheme might work in a cycle. So yeah, as you know, it's a group of people who save together and can take small loans from those savings. And then the accumulated savings and loans can be distributed back to members. So the purpose is to provide savings and loan facilities in a community that doesn't have easy access to more formal financial services. And obviously savings and loan schemes can vary in lots of ways, whether they're self-sustaining, so they're only using the community savings as the loan, or whether there's outside seed funding, also who provides the loan. So it could be the community, an NGO, a bank or credit union. They can vary in how they're targeted, the amount they loan, the balance between loans and savings, frequency of repayment and the time frame for repayment, the interest rate, whether they're offered to groups or individuals, and whether they use cash or digital mobile money disbursements. So I've got some resources to share after the event, which have further information and resources in relation to this. So we're going to move on to our first case study. But before we do that, is there any comments or questions on that from anybody? No? Okay, great. So if we move on to introduce Ezekiel Firi from Kumo Microfinance in Malawi, who's going to talk about his role and what he does.
Hello, good morning. I'm Ezekiel Firi, CEO for Kumo Microfinance Limited. This is a company in Malawi. I think from the definitions that were being given, we are a social enterprise, not for profit, and we aim at creating or helping the rural poor to create sustainable enterprises which can actually help them to improve their lives. And we start our work basically with the SLAs, and so we'll go through that just for us to appreciate the linkage between VSLAs and microfinance. My presentation will cover a few points. The first issue is just the introduction. And then we'll look at why the rural poor remain financially excluded. I think in the definitions, you remember, the financial exclusion was defined. And then we'll look at our solution to financial exclusion, how we do it. And we are going to also go into a bit more detail in terms of how we operate. And then we'll finalize by two aspects, where we are now, what we have achieved, and what are the impacts on the ground, on the people that we serve. And finally, the challenges and pitfalls to avoid when you are dealing in microfinance and helping the SLS. Next slide, please. So just as a matter of introduction, I think the definition of microfinance has already been given, which is the extension of financial services in general. But so it's any type of financial service, as long as it is small, it falls into the category of microfinance. And it might include microloans, savings, insurance, and maybe not that much exploited, things like pension schemes, etc. These are extended to individuals or groups that are often excluded by the formal banking sector. We consider microfinance essential simply because the lack of finance actually does deprive the majority in the developing world access to yield-enhancing technologies and the means by which they could diversify into high-value cash crops or high-value activities. But also lack of finance does prevent poor people from escaping poverty because it limits them from diversifying their sources of livelihood. If for those who live in a country like mine, most smallholder farmers rely on a very small piece of land where they only farm one season, relying on rain-fed. But then the expectation is that these should survive on this little piece of land the whole year. Of us have developed because we have multiple sources of livelihoods. When you also look at the developing world, 80 to 90% of the population actually lives in rural areas. And the lack of access to finance in the developing world, it means it denies the majority of the population the necessary capital they would need to increase their productivity. And lack of finance also leaves the rural population without any means of protection. So it's when shocks come, those who don't have financial services would have to start now journeying backwards by selling what they have in order to cope with the shock. Whereas a person who has access to finance might probably have insurance to help him through that. Next slide, please. Next slide, please. Thank you. So why the rural poor often excluded? This is some of the reasons can be found from Action, the Center for Financial Inclusion, and it highlights some of the reasons here. I must say that I've highlighted those that now apply to us here, where those that do not apply to Malawi, I have excluded them. So cost of delivery and supervising small loans in remote areas is very expensive. And so you find financial institutions tend to avoid providing small loans because they would be costly to provide. There is also the cost of building and operating branches in rural areas, which becomes prohibitive, and so institutions would avoid reaching people in those areas. Then there is limited literacy. Actually, financial inclusion or extending financial services works much better with slightly more educated clients. So it's more difficult to deal financially with those who don't have any education at all. Then there is also a tendency for financial institutions not to understand the needs of the customer. So most people will just dash and bring a loan product, but without looking at what exactly is the need on the ground. Then there's also limited institutional capacity. Where most of the institutions basically will have limitations. Like for us as a non-deposit taking institution, we cannot take deposits. So because we don't take deposits, but then for financial inclusion to work well, we need a person to have access to a multiple set of services. In that regard, it is important to work in collaboration. So for us, we work in collaboration with the banking sector, and then so we can use the bank agents or bank branches and so on in order to serve the people that we are dealing with. Now, in other countries like ours, we often have governments involved heavily in direct provision of financial services. And unfortunately, the challenge with government interventions is that they distort the market. And oftentimes they are culprits of increasing a culture of default. In Malawi, we do have one of the largest providers where government pumps a lot of money. Is called NIF, the National Entrepreneurship and Enhancement Fund. And they pump money every year, but they lose money every year. So where that is present, we say thumbs down to it. And many other institutions, they think that microfinance is it's the provision of microloans, and we call that a single product approach. But every person needs a set of services, and it is important that they have access to such. In Kumo, we operate a model that tries to resolve these challenges, as we'll see in the next slide. Next slide, please. Next slide, please. As I indicated, we are not for profit, and we provide financial services and entrepreneurship skills training, as well as awareness to the rural poor. We are a licensed and prudentially regulated non-deposit taking institution in Malawi. We are currently present in 23 districts of Malawi, serving about 67,700 active borrowers, of whom 83% are women. We focus on women for obvious reasons. One of them is that when you train a woman, you help a woman, then children are protected, they can be taken to school, and so on. Oftentimes, men don't pay much attention to the affairs of the home. Next slide, please. Next slide, please. Thank you. Characteristics of the people that we serve. We serve generally the poor, but productive segment of the population. And these are the people who are responsible for most of the country's agricultural production. The majority of them are women, and we also have about 30% of them age less than 25 people go to school very late. Maybe they get married a little earlier as well. So most of the ladies will be at 25, maybe already having 3 children or so. So that accounts for the reason or that why we have about a third being aged under 25. The majority are in villages which are very hard to reach. Actually, we pride ourselves as reaching the deepest parts of the country compared to our peers. But when we go down, as I indicated, most of them, they are actually surviving on 2-acre piece of land as a household. And the average educational level is standard 5 primary. For those who use grades, I think that probably be kind of grade 3. The majority have no knowledge of how to conduct business. And an estimate is that 57% of them had never had any training to improve or start business when they join us. 68% of them actually venture into business by copying the neighbor. And for that reason, they actually start businesses that require less capital. And oftentimes they cannot succeed because they are just copying, and maybe they just compete with each other because of the lack of understanding of what entrepreneurship is all about. Selling of agricultural produce is the most common source of income. So what they have harvested from the 2 acres is what they sell. And the majority also don't have any marketing skills, therefore. And as a result, we see them selling items in haste at very low prices, just as soon as they have harvested, instead of waiting a bit and for prices to rise so that we can make more money. I would like to also mention that part of our strategy, we include people with disabilities in our operations. Since we are standing for financial inclusion, we do not directly target just the people with disabilities, but we include them in the groups that we deal with. There are advantages in doing so, in the sense that the peer learning, peer support is achieved in that process. Next slide, please. In terms of what we do, we provide financial services. And then the financial services, the first thing we want people to learn is to learn how to save. But then since they are in the village, there's no bank infrastructure. The place that people can learn how to save is the Village and Savings and Loans Group. So we do facilitate village and savings and loans in general, either by creating new groups or adopting those that others were trying to promote. Then from the savings groups, we provide microloans. Then we provide insurance. And as they become self-sustaining and resilient, some of them grow, and we can then provide them individual loans for slightly bigger businesses. But throughout this process, we are providing training at all stages for the people to know how they can do business better. We also provide training in such areas as environmental protection, and even on global issues like gender, as well as climate change and HIV/AIDS. So we build our services around savings and loans groups. A savings and loans group is actually self-forming and self-managing. I think in the definitions, if we all had, you might have one group having a different interest rate from another. So each group forms their own rules on how they are going to conduct themselves. It is self-forming because then they trust each other. It's people who can trust each other with their money. And then they meet regularly. In our case, our groups, they meet bi-weekly, but in other entities, they might meet weekly. Others, they might meet monthly to save their money and access more loans. How they work is they create a fund, and from that fund, people can borrow and repay with a rate of interest. And at the end of the year, they calculate the interest and share the savings as well as the interest according to how much each person saved. In Kumo, we do differentiate the village and savings and loans groups into two. This is our definition. It's not a definition that you'll find in the books, so forgive us for that. We have one group that we call, a category that we call capital hungry. Now, these are people who are highly economically active. They want to do things which they would also want to grow. And these are the people who need more capital than what they are able to save within the group. They are engaged in business activities which they would like to grow. And these are the people we then target for microfinance in general, in the broader sense, that we can now provide loans to these. We can provide insurance to them, and so on and so on. Then there's the other group, which is a consumption saving group. They are just saving for consumption, really not doing anything productive. Now, such groups are a bit risky for microfinance in the sense that they often or the cash that they
We seem to have temporarily lost Ezekiel for a minute. Hopefully his connection will kick back in. The joys of technology.
Just while we're waiting, would it be possible to ask, it may be covered in another slide we've yet to see, of course, but I'd be interested to know from Ezekiel what interest levels they charge, because to us Westerners, they can sometimes seem extortionately high, but it would be useful to know, and he can put it in context of what the bank rates are in Africa, which are much, much higher, astronomical compared to here. So I think that would give us a bit of financial context, if that's possible.
Yeah, we can put that to him. Hopefully he will
Thank you.
rejoin. I'm hoping that his internet link hasn't gone down or they've had a power cut, because that was a very interesting presentation.
Yeah, it's very, very valuable.
No, he seems to have dropped off the meeting, which is a real shame. What do you think's best? Do you think we should go to the next presentation and hope that Ezekiel rejoins?
Yeah, I'm wondering if we should show your video, the Capacity Foundation video. We could play that now, just as an introduction to what you're doing, and then hopefully, if Ezekiel returns, we can ask him to resume, if that's okay.
Yeah.
Right. How far through were we with Ezekiel? How many more slides did he have?
A fair few, although he assured us it was going to be it wasn't going to be a long presentation. I think we're about halfway through his slides.
Right. Okay.
Great. So I'm just going to, Stephen, obviously you can talk about this afterwards, but this is from the Capacity Foundation website. Oh, hold on. I've just realized I haven't done the correct settings when I've shared that. Share screen, optimize, right.
Wait indeed.
Can you see that?
But the Malenga rural poor have worked out what to do about it. They have introduced Bubble Up, boosting their local economy from the grassroots up rather than waiting for trickle down. Here's how. Like any other charity, the Capacity Foundation is starting by injecting money raised in the UK, but the charity in the UK expects to close within 10 years. This is because the operation in Malenga will be self-funding, and it's already starting. So folks in Malenga can apply for small loans, starting at just over £65 each. They are given marketing and business skills training that's relevant to their economy. They don't need an MBA. To take the course, they have to be literate and numerate, so the foundation runs adult literacy classes so that anybody can access the loan programme. After coming up with an approved business plan, each loan taker repays their loan over 10 months. That's a long time by microcredit standards, plus a 25% charge on the capital sum. The 25% does two things. 5% of it goes toward the running costs of the foundation on the ground, the 4 managers who run the programme, and the 9 part-time teachers who deliver the Adult Literacy Academy. They're all Malawian staff, by the way. The beauty of each loan is its evergreen nature. As each loan is repaid, it's reissued to someone else, and then to someone else, and so on. But a truly innovative idea is the Social Action Fund. 20% of the 25% charge goes into this community fund, which is controlled by the consultative mechanism that already exists among the 50 villages of Malenga. It's there already. The Social Action Fund is vital because it starts to fill in the gaps that the government leaves and which conventional charities can't fill. After 2 years, and over 120 loans having been issued, some loan takers have applied for successive loans, with one outlier presently on a £500 loan. Although circumstances make timely repayment a challenge, the eventual default rate is a mere 2%. Malenga solution means that £10,000, in local currency close to 10 million kwacha, has been invested directly into the hands of local people. There is no scope for corruption because the money doesn't have to pass through layers of government departments. Do the arithmetic and you'll see that the loan book has generated £2,000 for the Social Action Fund, which the community has decided to use by repairing water culverts and running new water lines, a step toward water security, one of those challenges we heard about in Chituka 4 years ago. Because not everybody wants to or can run a business, it's important that loan takers are beginning to employ other people to help them. The carpenter who takes on an assistant, the groceries seller who opens a shop with staff, the owner of a donut business who employs a cook, and so forth. And to help things along, the foundation is beginning to form social enterprises, which small loan takers can't attempt, injecting yet more capital and employment into the local economy. The beauty of the social enterprises is that the profit goes into the foundation and not into shareholders. Examples are a motorcycle taxi and a truck hire business. That might sound surprising, but lots of loan takers need to get their produce and goods to market, and some of those markets are somewhat distant. As the loan book swells and the Social Action Fund grows with it, the fund will soon pass the amount of money the Malawian government allocates to development work in Malenga annually. That will be a landmark. The fund gives the community the scope to begin to plug holes in public services that conventional charities can't reach, perhaps employing a district nurse, or supplying school books, or repairing a footbridge, or running nutrition classes. All of it will be up to the community. The last question is, why will the UK charity be able to fold and say its job is done? Actually, there are 2 reasons. First, because once the loan book gets to a certain size, all those 5% will pay for the operation on the ground in Malenga, the equipment, the staff, the offices, and all the services they provide. Second, the size of the loan book, extending by then to hundreds of thousands of pounds invested locally, will spur the local economy into growth, so that UK investment isn't required. Future investment, to increase the loan book, will be purely local. The key outcome is that the community has found a way to both boost its local bubble-up economy and to fund local services, and in a way that's truly sustainable. You can find more information about the foundation on its website, thecapacityfoundation.org.
So, has Ezekiel returned? Not yet.
He hasn't, and I've messaged him, but I haven't had a response. So
okay. And Emily also, we're waiting for still, I think, aren't we?
Right, so I mean, I'm happy to proceed. It's really sad if we don't get Emily's input, and she may yet join.
Yeah.
But I can cover off the 2 slides if you wish.
Yeah, I think if we carry on with that for now and hope that they will join us shortly, that would be great. Beth, could you share? Or actually, yeah, you've got them. Great. And sorry, I didn't introduce you very well, Stephen. If you could introduce your organisation and the sort of context behind that animation, because we started it halfway through for time purposes. But
yes, yes. Thank you very much for sharing that. Yeah, my name is Stephen Maund. I've run a marketing company in the UK for a number of years, which I finished last year, and it happened to be a company that raised money for charities through legacies. So I've got kind of various ways into all of this, both professionally and as an interest. The Capacity Foundation is a poverty relief program, a charity basically. But this today we're talking about ways that we do it, and you've heard a bit of that in the 4-minute clip that Beth and Emma were very kind to share. I'm sorry, this presentation on screen, it's not laid out properly. I think it's probably just different formatting between the machines we're using. So sorry if it looks like a little untidy, but as far as I can see, nothing's missing. From the clip, you know already that we charge a 25% levy on each capital loan. So it's about £65. So do the math. It's about, if you say it's £60 loan, they pay back 75, and that's over 10 months. Most microloans are over a very much shorter period, as little as 8 weeks, but we've extended it. And you know from the clip too that the community decided to spend its initial £2,000, 2 million kwacha, on repairing 4 bridges and culverts. And you can see here on the pictures which illustrate on the left plainly a rather rickety, very dangerous existing bridge, which was then converted into the one you see in the middle. And partway along in doing that work, they created a culvert so you can see it from the side. The car is there. Well, that's actually Emily's company car, I suppose you might call it. It's the charity's car, but it illustrates the size of the bridge. And this is really important. The community decided to do this themselves, and it's decided through the mechanism which was alluded to in the clip. Each village of about 50 villages, each one has a village head, and they have village development committees within that. So they have their own little consultative committees, whether the village is 50 households or 500, it's the same mechanism. And then above that, there's an area development committee. That's about a dozen people who are drawn from those village heads, and then they decide for the area as a whole. So in Malawi, you have a substructure under, they have district councils like we do, but under that, there's a traditional authority structure known as the TA structure. And you heard in the clip reference to Malenga and Zoma. That's a traditional authority area of about 27,000 people. About 5,000 villages, households, I beg your pardon, in these 50 villages. And so it's within that area that we work, and it's within that structure that this Area Development Committee operates. So the ADC really represents the population of about 27,000 defined by this traditional authority zone. They oversaw the work as well. So they were kind of project managers, if you like. Our country manager, Emily, kept her hand on it as supervised it. But the work was actually overseen by the ADC, and they received the £2,000. They open a bank account, the money flows through, it's all receipted, and then usually they close the account at the end. That just seems to be a bit of a discipline they've adopted, so it can't just be kind of lying fallow and used by someone else. So it tends to be a very slick operation. The money goes into a fresh account, it's dealt with, it's accounted for, receipted, and so forth, and then closed. We're a great believer at capacity in using local skills wherever possible. So it's local craftsmen who built these road bridges and the culverts, and that's a very strong principle for us. We have nobody from outside Malawi working for the foundation. That's a principle. It keeps our costs low. It means we can find all the skills locally, and we can find all the skills we need in Malawi. We don't have to import them. They're there. You have to look keenly sometimes to find some of the skills you want, but they're all there. If we can skip to slide 2. And we have a slightly different take on social enterprises. If you look at the green box, this is pretty much the principles under which we operate our social enterprises. So we term social enterprises as any business which will be of benefit to the foundation's funding. So If I'd set up a company as shareholder and owner, I'd be able to take the profit out of it as well as my living costs. With social enterprises, all of the profit goes, which we hope is considerable, earned fairly, but all of that goes into the foundation. So Capacity as a foundation is both a charity registered in Malawi and it's a company, so it can operate under the company rules in Malawi as well, which are very similar to the UK. Obviously, as operations, that they employ people locally. So I think Emily probably has about 20 people working in the 3 enterprises I'm going to show you. And the enterprise is like any other business. I'm going to labour this point. They are just like any other business. They repay their initial investment. So the Cymru grocery store, Cymru means love in Chichewa. So the love grocery store sounds terrific, and it is. That will repay its capital over time, and then the remainder of its profits will be solely devoted to the Capacity Foundation charitable arm. So Cymru is our really successful operation. I'm going to say it's Emily's achievement, and it's such a shame she's not here to present herself. But these were her suggestions, and she's thought these through. She has a business and tourism diploma. So Emily is educated to a good standard, but she's also got a fantastic knack. So she brings a lot of flair to this. So we opened Cymru only 5 months ago. So from the end of August, it's begun to pay about £1,500 or so per month to the foundation. And the foundation trustees have yet to decide how much of that will go toward repaying the capital and how much will be put directly into the foundation's running costs. I know they want to get to the second bit as soon as they can, but as I say, it's an important thing that we repay the capital investment first, or at least as well. So what I hope they'll do is split it into 2, and then half will go to repaying the capital investment. The rest will go to the foundation's income. And that would mean that the costs would be paid off within probably a year or so. And then everything would be to the foundation. Emily already has ideas to open a second store. So this store is in a place called Chintechi, which is a trading center. It's like a small market town, very close to Malengrumzoma TA. But she wants to open a store in Mzuzu, which is the biggest city in north of Malawi. So there are 3 big cities, Lilongwe, Blantyre, and Mzuzu. Mzuzu is the one in the north. And Emily feels that if we were to open a store there, we would probably be receiving 2 to 3 times the income from that store compared to the one we have in Chintechi. So she has big plans. And I do hope she comes online later, because she might be able to explain her new idea, which is that the Cymru notion could be franchised for the benefit of other charities who similarly want to have that kind of store, because she feels it's an idea that has ubiquity. It could be applied in many places. And it doesn't necessarily have to be right in the area where a charity is working. Chintechi, where this one is actually just outside Malengrumzoma, but that's where we're based. The Mama restaurant, it'd be lovely to say this is making a profit now, but I think it's actually quite salutary to realize that not everything is easy in a place like Malawi. You can't just open something and assume it will work. So initially we had a really good time with Mama when it opened before Christmas, but the Malawi government's restrictions on people attending and sitting inside in restaurants are very similar to ours, and they've really impeded the progress we had initially. So we're switching. There's a very large garden at the back. So Emily's idea now is to run birthday parties, wedding celebrations, and concerts at the back, because those government rules in Malawi allow you to have up to 50 people in an open space. So that would be enough to make that work. So we're just kind of slipping and sliding a bit to try and make sure that Mama surfaces. We want to keep it going, even though it's not making money at the moment, because eventually it will. We just need to get past the COVID crisis. And then the third item, just to conclude, is a fishing boat. Lake Malawi runs the length of the country, and it forms a big part of the economy in the northern area, where there's a huge lakeside, shoreside. You might say, well, why are we running a fishing boat when there's already plenty? The answer is there's plenty of scope. So Emily will explain how the fishing boat works, but basically they fish for very small fish. They look like sprats, but they're called usipa, so local food. And it takes a 9-man crew in 2 canoes alongside this boat, which it'd be lovely to show it to you on the water, but this is the only picture I have of it. So it's a 9-man crew who therefore are also earning a living off our efforts because we pay them plainly. And the produce is shared between the person who manages the boat. In fact, in the clip, I alluded to a lady, unnamed, but she's called Elise, who is our biggest loan taker. She's got a £500 loan currently, suspended at the moment, as all the loans are because of COVID, but she has that large loan. She's a very good business person, and she manages the boat and takes a share of the fish profit. And then the rest of the profit is, the rest of the profit goes to the foundation. So as an example of scale, Elise has contributed about £500 to foundation funds during the month of August alone. Work it out, that's about 6,000 a year. To put that in context, and this is where I'll finish, the Capacity Foundation runs on about £37,000 a year. That's partly because we have no external employees. Everybody's employed in Malawi. They are all Malawians. We have no external costs. So if you have the fishing boat producing £5,000 or £6,000 a year, and the Cymru grocery store producing maybe 18 or 19, you can see that these businesses on their own are not far short of being able to fund the £37,000 a year running costs we need to keep going. I'll stop there and hope that Ezekiel can come back, or even that my friend and colleague Emily can join us.
Great, thanks, Stephen. I'm afraid Ezekiel hasn't been able to rejoin by Zoom, but I have called him on WhatsApp and he's on loudspeaker. So I tell you, Ezekiel, can you hear what's happening?
Yes, I can hear you.
And can everyone hear Ezekiel?
Yes.
Okay, Stephen, maybe you could try the same thing with Emily, at least to try and have her on. We've done this once before in events. It's not ideal, but I guess it's better than not having them present at all.
Okay.
Yeah, do you want to try?
I'll arrange that while Ezekiel's talking. And hello, Ezekiel. I'm really enjoying your presentation.
Great.
Thank you very much.
Beth, do you want to screen share where
Yeah.
Ezekiel got up to?
I will indeed.
And if you just, so we're on the slide where you were talking about
according to mine, I think we were on slide number 10, so we can move to slide number 11.
Yeah, you were just talking about your types of saving group and the capital hungry and the consumption saver.
So that where I was saying that we focus on the capital hungry groups with loans and other things, whereas the consumer savers, these we can support them with the insurance products, but giving them loans would just make them overburdened and over-indebted. So I was saying that the crisis that was there, the microfinance crisis that happened a few years ago in India, was because people were borrowing for consumption and not for production. And therefore, when it came to repayment, they were struggling to repay. So these are a dangerous group to actually start thinking about providing them with loans.
Okay.
Then we can move to the next slide.
Can I just ask related to that? Sorry, Ezekiel. One of the questions Stephen asked was about the interest rate that you charge on your loans. What level do you charge for repayments?
Okay, the savings, the VSLAs, they charge their own interest, as I say, and most of the interest rates, the rates they use, vary from 10% per month, and some might go as high as 20% per month. We charge, depending on the loan size and the category, so we have several other products, but we charge between 4 and 6% on the reducing balance per month, which is far away cheaper than what the VSLAs charge each other.
And how does that compare to the banks, Ezekiel? What kind of interest rate do the banks charge?
The banks, if you, depending also on the risk profile, They charge normally per annum. So it's between 23 for the less risky loans. Let's say loans to employed persons against salaries will be around 23, and it can go up to about 27.
Excellent, thank you. I've moved on to the next slide.
Thank you. So the reason why we use BSLAs, one is we notice that BSLAs enable rural people to build their wealth. As they save and they realize actually decent returns. So they are getting a return of, let's say, 10% a fortnight on what they have saved, and over as they do compound that over the year, they do actually realize much more than what they can get through the commercial banks. The commercial banks pay something like 1% or 3% per annum. Which is nothing if you are looking at a micro saving. The other bit is that VSLAs inform MFIs of the credit culture of individuals. These are when you are dealing with individuals who have never ever had a bank account, you don't know their credit track record, and by just observing how they are operating in a VSLA group setting, you can tell that this one is credit worthy and this one is probably a credit risk. So we use VSLAs to inform ourselves about the credit culture of prospective borrowers. But also VSLAs provide social collateral by way of group solidarity. Enabling us to lend without people having to provide physical collaterals. So all our loans are given without physical collateral. We rely on the solidarity of the group as our collateral to the lending that we provide.
Sorry, Ezekiel, could you just explain what you mean by physical collateral?
Physical collateral is having physical assets you can provide as collateral. Now, the rural poor might not have any physical asset that they can give.
Okay, thank you.
And then the VSLAs also enable us to consolidate a number of small loans. For example, you have requests coming from 25 people for very small amounts, £20 each. Maybe another one 20 pounds, another one 15, another one 35. Instead of managing individual 25-pound loans, we can, when we consolidate them, it will be one loan to 25 people, but then the amount now is larger and it makes it more economic to manage. The VSLAs also provide a forum through which other services such as training as well and awareness can be easily provided in a more cost-effective manner. And VSLAs are also the only way through which the rural poor can be helped to become productive and resilient. So if they get capital from there to produce more, we can channel insurance through that, and in that way they become a resilient person. How we get them, I think I did mention how we get the VSLAs, but there's a process if you're going into virgin areas where no VSLAs existed. Then we start with sensitization meetings at district leadership level, and we cascade down to the local leaders, village heads, and then to the communities themselves. After that, when people now have made a decision to form a group, we conduct trainings to those that have decided, but these are the self-form as I indicated, and then we provide them training on how to conduct themselves as a group, to develop a constitution for themselves, and how they can be managing the savings of the group, and how they can be managing loans for the group. including providing all the materials that are necessary for the same. And then we oversee these activities for 3 to 4 group meetings, just to verify cohesion and credit trustworthiness for a Kumo loan. Now, in terms of our delivery model, we come to slide number 14. Our delivery model is aiming at removing some of the barriers that we talked about, the branch network, how expensive it is, and the single product interventions. So our delivery model is branchless. We don't need physical infrastructure to operate in an area. What we do is we send our facilitator, whom we call a financial services officer, and they'll be located in a community, and they'll be facilitating all the activities. In that way, the costs, they will cut down on the cost of physical infrastructure. Then we are cashless. There is no physical movement of cash between us and the customer. How we do that is loans are extended through the financial system. So each group is asked to open a bank account with a commercial bank that is nearest to them. And then when we are disbursing the loans, the group loan is sent to the group bank account. And then the group is responsible for withdrawing that amount and distributing to each individual member of the group, but in the presence of our facilitator. And when they are repaying, they also go either to the bank branch or to a bank agent nearest to them, and they make the payment direct to Kumo's bank account. So there is no handling of cash by our officers involved in it. And then we provide a comprehensive set of services, which includes the facilitation of savings, the extension of loans so that we increase access to capital, given that if they were just relying on what the group is able to save, then the businesses they can do will be actually much, much smaller, and the growth of the same will be limited. So we provide capital so for faster expansion. As they expand, that increases their ability to save much more, growing also the BSLA fund in the process. We provide insurance for risk mitigation, insurance against the individual, insurance against illness, and we've also extended insurance against crop failure in certain areas. And we provide skills training and awareness for meaningful economic activity at village level. Some of the products are listed in the next slide. So village facilitation is one of the services that we provide. Then the loan products, we have enterprise loans. We have 2 categories in that under enterprise loans. One is for petty trading, that's the small one, which is done through the group. But as they grow, we provide individual loans so that they can do something bigger. We do also take new customers with innovative business ideas at rural level directly into the second category of the enterprise loan. We also have agricultural loan products. Fumba and Mtetsanjara are basically for agricultural inputs. And then Davis specifically targets the tea sector. I should mention that for those who engage in farming at a larger scale and are looking for larger loans, they join under the Super Masika product and the individual product, which is tailored to each individual according to their need. Then the insurance services, we have credit life, which comes with a funeral benefit cover. Credit life means that when the person is unwell, then insurance pays their installment while they are unwell, and we also provide them with cash support while they are hospitalized. In the event of death, then we pay off the loan through insurance, and we also provide a funeral support amount towards the bereaved family as they bury the client we have lost. We have family funeral benefit insurance for a very small amount. We cover every member of the family so that in case of death of a member, then insurance supports the subscriber with some money to pay funeral expenses. This then helps to ensure that the person does not start selling business assets or essential assets to conduct a funeral for their family member. We have, as I indicated, extended weather index and area yield index insurance covers for VSLA clients. Then the entrepreneur training, which I'm going to talk about in the next slide, which is just showing pictures of how we are doing it. Our entrepreneurship model looks at how to identify business opportunities, how to analyze which one is viable, how to set up a business, how to run one, how to price products, and so on and so on. So we have a set of 26 modules, which match with the number of times a BSLA group would meet in a year, 52 weeks. At fortnightly meetings, there will be 26 meetings. So we have 26 modules covering various aspects of enterprise, including gender, HIV, they are part and parcel of the modules that we provide. Now, the trainings are provided.
Ezekiel, sorry to interrupt you. I'm just conscious of time because we lost a bit of time when you dropped out. And there's a fair bit of detail in your presentation, but would you be okay if I share the detail?
If you can share those,
then people will have those for reference.
I think I can then move to challenges, I guess.
Yeah, is that okay? And then I'd like to bring Emily in because she's here now, and it'd be good to introduce her and have her input as well, and then a bit of time for questions and so on. So if you could just maybe do a couple of minutes.
I think the other bits are clear and self-explanatory. I think I've just to talk about the challenges and pitfalls, if that's not a problem.
Yeah, that's great. So that's,
Yeah, so the challenges we find in working where we work is one is the absence of an entrepreneurial culture and knowledge. Where we find that this basically limits the ability of the rural people to see and utilize opportunities around them. I think, Emma, you asked me to explain the trip that I had last week. I was going into rural areas where Link International have been providing basic education to some young girls who actually started school very, very late. And some of these are actually maybe 18, 19 now. And they have decided that they can't continue with education, but they need something to do. So we're looking at the environment in which they are and what possible opportunities they could do. And we find a lot of opportunities that are not exploited just because people don't have an entrepreneurial culture. For example, we found in an area, vast lands where are uncultivated. You don't even need an irrigation system. The water, the soil is moist all year round. You can grow beans and so on, but nobody is looking at that. We found schools where children are learning, and at break time they have nowhere they can even buy a snack for themselves. We found trading centers with lots of buildings that are just lying idle, which people could actually rent and maybe run a grocery store. So this is one of the challenges that we see. And then BSLAs, especially those that operate without institutional guidance, they tend to be consumption oriented, and that's basically and in the end we end up with social ills like people committing suicide because they could not repay and so on. COVID-19 was another challenge that we faced. There were meeting restrictions that affected our drive to increase reach. Sensitization meetings could not be held as before. And also we needed to invest in personal protective equipment for the groups as well as for staff. But we did negotiate with one of our partners, GIZ, and they provided us with some 6-month supply of PPEs. But also because business was not being conducted as usual, then our customers could not repay us as usual, which this strained our cash flows. We had to slow down operations somehow. The other challenge that we had is difficult to reach areas, which is where we work. The roads are bad, internet connection is a problem. The bank agencies are not there to support efficient operations. So while we use mobile platforms for some processes, we have to be using those that can also work offline in such environment. And then as a non-deposit taking entity, our challenge is we are limited on lending capital. While the need is great in Malawi, but our own lending capital base is more. Unfortunately, most development partners nowadays, they tend to be reluctant to provide seed funds for institutions like ourselves to reach the next mile. These are some of the challenges I wanted to raise. Thank you for your attention.
Great. Thank you very much, Ezekiel. It's really interesting, and thanks for your presentation. I'm just going to introduce Emily. Welcome. Thanks for joining us, and sorry it's been so many technical issues with you arriving, but it's great to see you. So yeah, thanks for taking the time to join us. If I could ask you to unmute, I don't know if I can unmute you. Do you want to just quickly, Stephen's talked a bit about the project and introduced the slides that you prepared and talked through those already. But maybe you could just introduce yourself and talk a bit about your role and the kind of key learnings, maybe particularly over COVID and how that's affected what you do.
Okay, thank you. Emily Nkoma, Programs Manager for Capacity Foundation. My role really is to coordinate and make new plans around here at Capacity Foundation, where I say that, oh, maybe if we are to sustain, let's use this way. So maybe as Steve has already said, I don't know in which order, we have the enterprise where we are doing businesses. We have a meat supermarket, a restaurant, and the fishing gear. Really, these are just to make sure that we do not depend on a donor aid. The meat supermarket is doing really well. We've set aside 15% of the markup so that to fund different projects. We began in April this year, so we've operated for at least 5 months. there are plans to open a new one in Mzuzu so that we have educate funding to be able to support more projects. With the restaurant, which is called Mama, we're having hard times because of COVID, but we are doing our very best so that we sustain the restaurant. We know that we'll go through this. So we've planned to be holding some events while having COVID restrictions in our mind, so that the restaurant remains sustainable. It only made profits during the early days of operations when before the COVID restrictions came in. And also we have a fishing gear, which is really seasonal. So it relies on good weather. They cannot go for fishing if it's bad weather. And also it's seasonal. During hot season, you expect more catch other than when it's cold. So that one alone for the month of August provided us with at least 500 pounds. Yeah. So in all these businesses, we've at least created employment of over 20 people. So to us, it's great. It's not just about sustaining the organization, but also we are supporting the livelihood of other people. Now, social action.
Yeah. So Stephen talked about the Social Action Fund a bit. I'm just conscious of time because we've got 15 minutes left. And I'd be good if people wanted to ask any specific questions of you or of Ezekiel too, because we haven't had an opportunity for questions yet. Does anyone want to unmute or put anything in the chat? Does anyone have any questions that they'd like to ask?
There's a question in the chat already, Emma, around small models and looking for ones particularly interested in finding examples of very small schemes which could be self-administered in villages with minimal cash seed fund due to government restrictions. Does anybody have any examples or know of any models that we could refer Ian to?
So is that talking about more about the village savings schemes? So Emily, maybe do you want to talk about how you set up? Because yours, I mean, you started fairly small scale, didn't you, in the villages you're working in?
Mm-hmm.
How did you go about that?
Okay, with us, we've always worked through consultations with ADC and VDCs. We have the Village Development Committee and the Area Development Committee. So these are like pillars of communities with decentralization. So instead of government having to come direct to the village, then there are these pillars, which are the ADC and the VDC. So how we had to set up was our criteria based on the trustworthy, and if at all that person lives in that community. We haven't said ourselves to say no, only this age. We are accommodating almost all age groups. So the villages plus the chiefs and the area development committee would decide to say, okay, because it's very, they are small communities, so almost everyone knows everyone. So they would know that, okay, this person, you can give him or her a loan, he will not run away. So they work in groups. The reason why we work in groups is because sometimes the group will be responsible if anything happens, and some people have less skills, so it means they can learn from one another. We have people, field officers, my colleagues, who monitor these groups. So they mentor them, talk about group dynamics and everything. It's different from Ezekiel, who has just explained that the individuals go themselves to deposit the monies, but in our case, we have our own special loan account. So once the group registers the repayment date, then our field officers go to collect the money and they transfer them in the account. So there's accountability where the group sees what we've collected, and also they have their own records where they say, okay, this group deposited this, something like that. That's how we manage it.
Both of you mentioned Ezekiel too about, and that's when I've been looking at the sort of research and evidence around the impact of groups, particularly loan schemes. The issue of people not being able to repay and defaulting, and that sort of the stress. I mean, you mentioned suicide, Ezekiel. I know that's extreme, but that how do you support if people cannot repay and they're in a group? What happens? How do you protect people from that the stress of that circumstance if they're in a group environment? Sort of, you mentioned the group dynamics within a village. So how do you sort of manage that if one person can't repay?
Okay, what we do, there's always a procedure. One has to report if he's absent. So if he's not absent for no any reason, without having to report, it means they are given a fine. So that amount remains the group amount. So it doesn't belong to us. And also, so once they gather that latecomers, absenteeism, so all these monies acquired through this way, the group can use to repay for someone who hasn't repaid. And also, if someone is going through challenges, so this is why we always encourage them to say if they are going through a certain problem, they have to report to the group. It means the group can contribute a little from individuals and then pay for someone. And also another thing, because they are aware with the benefits of the social action fund, even the chiefs, they take part in trying to cushion the groups so that they do not default and the like. So through these fines and a group contribution, that's how we protect the monies from defaulters.
Great, thank you. Has anyone got any other
Amy
questions?
has her hand up.
Oh, Amy, would you like to go?
Hi, thank you. And yes, thank you for the presentations. I really enjoyed them. They were really, really helpful. I chair of trustees for a charity called Blossom Africa, and we have 6 savings and loan groups in Uganda. And I think our initial kind of vision was that we would do something quite similar to the Capacity Foundation organisation, where the groups got to a point where they were running community projects and supporting the wider community. But what we found is that the groups, even a few, some of our groups we formed initially are kind of 3-4 years old now. I lose track a little bit, especially with COVID, but a good couple of years old. They're really established, but they're still very much at the stage where they're taking small loans to try and reduce poverty at a household level. Each of our savings and loans groups do have a welfare fund, which again we hoped at one point would be like a pot of money for kind of more community focused projects, but that pot of money is used for funerals and emergencies, and it's never got to the point where there is that kind of scope for anything more than that really small scale kind of individual level projects. So I was quite interested to hear kind of how or if you made that jump, or whether that was just always the case with your groups, because I almost can't see us getting to that point where you are with our groups. So yeah, just interested to hear your experiences really.
Okay, within, as I've said, if someone has reported to say that they have a problem, then it's understandable to everyone else to say that, okay, this amount, though, it's really for any emergency attached to capacity foundation. Of course, they have their own welfare, so it's not about fine and everything. They may agree as a group to say that how much do we contribute, so that if someone else, so that amount is agreed. And as I've said also, because we work through consultations, and always the chiefs, ADC, they always meet with these people to say, if you don't repay, this is what will happen. So everyone else is more of like cautious about what they are doing. Apart from this COVID period where we said, oh, maybe if we can stop a bit to allow people, maybe, yeah.
May I just add a point?
Yeah.
Emily, as usual, has given a comprehensive answer, but the direct answer to Amy's core question is that our loans program was set up with the social action fund element embedded right from the beginning. So we ran a survey. If you've seen the early part of the clip, we actually ran a survey of 10% of all the households in Malenga and Zoma before we even started 5 years ago. And right from the very beginning, everybody in the area knew that we would be implementing the social action fund. So they know that a portion, big chunk of the portion of the levy they pay on their loans goes directly back to the community. In a way, it's a kind of incentive, an extra incentive that to default on their loans means also defaulting on building bridges and doing the other things the community wants.
Okay, thank you.
We've got time for one last question. Does anyone have any other questions or comments, or would like to share any of their experience from what they've been working on? Anybody? Oh, Ezekiel's back. Welcome.
Yeah, thank you. I'm back. Sorry for the inconvenience. I think the question that was asked is, how do you deal with people who are defaulting? I think if you heard from Emily's presentation, people are borrowing for funerals and so on and so on. For us, we are saying, if they are borrowing for an income generating activity, they will have the capacity to meet most of those costs. Of course, they do have a social fund from which they can support each other. But when they have failed to repay a loan to us, we know that they have savings which are actually collateral within the group which they have made. So they will actually use those savings of a person who has defaulted to pay off any loans that are outstanding. So the savings they are making already do act as collateral for any defaults that would happen. But if a person really can't repay and there's nothing we can do, well, we don't go back to them and say we need to take this or that, because there's nothing that we can collect from there. That's the risk that we take as a financial, and we can write off that loan if it becomes not collectible. However, the person then risks having their name in the credit bureau circles, because we do report as requirement any defaulters, those who have failed. So next time they go to another institution, they cannot access a loan until they come back to us again. So that's how we do it. We do not persecute any of our customers who have defaulted.
Okay, thank you.
But I think what we are trying to mention is that when we are giving loans, it is important that the loans are for productive purposes, because then that increases their ability. It helps them to afford to repay their loans.
Thank you very much. I'm just aware of time and we need to wrap up, really. We're just going to Yeah, I want to just talk about client protection principles. I came across it in my reading, and I'm sure that Ezekiel and Stephen and Emily, you're aware of these already. But I've put a link to them in the resources, which I'll be sending you. So we're just going to finish with a quick poll. I think I can launch this. If you could just fill these in for us, that would really help us just to assess how the session went. Sorry for the technical issues. It's one of those things that we have, but it's been fantastic to have Emily and Ezekiel in particular joining us, and thank you to Stephen too. Really interesting presentation. I'll send an email out afterwards with a link to some resources, and if it's okay with you to attach your presentations as PDFs. And we've got a longer survey, so if you'd like to give any more comments, that's really valuable to us in improving what we do. Yeah, I'm thinking to possibly organise a follow-up session focused more on social enterprise at our summit, which is in January. So if you have any thoughts or ideas or anything that you'd like to see or explore more in that kind of session, please let us know. That would be really helpful. I think, yeah, that's everybody done the poll. So thank you very much. Yeah, I think we're closing. Sorry, Beth, it was back to you for the end.
Okay. No, just to say thank you. Thank you to everybody for bearing with us, as Emma said, and for your contributions. It's been really useful and interesting. And yeah, thank you to our speakers in particular. So yeah, that's it for today. Hopefully we'll see you at other events soon. All right. Take care, everybody.
Bye.
Bye. Bye.
Thank you.
Bye.